Crypto leader crumbled earlier this week. BlockFi declared bankruptcy on Monday, the latest financial casualty following the fall of FTX exchange. All of this volatility has left people wondering and more skeptical about cryptocurrency. Financial analyst and estate planner Ernie Burns joins us now to weigh in. Good morning.
Good morning.
So what's your take on cryptocurrency?
Well, most people it's not appropriate for, especially retirees, because you don't know what you're buying. If you buy a stock, you know what you're buying. You own an actual certificate, in a sense. You know that you can sell it. There's an exchange that will purchase it back from you. Cryptocurrencies, there's questions, and it's not so easy.
Is that the big weakness, that there really isn't necessarily anything that backs it up? Like, when you buy Ford has factories, they have market share.
And there's regulations, and there's actually an exchange that's going to basically trade it back and forth. The big fallacy and the issues is that, do you know what you're buying? And people get mixed up between Bitcoin and cryptocurrency. Bitcoin is an actual coin that is built by the computers, but you actually own it. Cryptocurrency is a promise, where it's in a category that's not regulated.
Do you see more regulation coming in
the future? I do. I think there's going to be some more hurt on the cryptocurrency side, but that's going to give lift to the Bitcoin because of the authenticity of it and the value of it.
I'm sure you've followed the thought that the governments themselves will get into some kind of, sort of digital dollar, or however you look at it. You could argue we've kind of moved toward that in some ways with the use of plastic, but there's no interest rate in what the other people are talking about. I mean, do you see a day when that sort of thing happens?
Yes. In fact, China is going to come out this year with a currency themselves, a digital currency. And the scary thing about China is, and this was reported last year through a couple reporters, my point is that they're going to build a digital currency and then one day make people or countries or businessmen buy their products and their services with their cryptocurrency. So therefore, since they have a centralized bank, they can have a lot of power over nations in the future. So that digital currency in China could be very, very dangerous.
And China's attempt to maybe combat definitely to combat the dollar ultimately,
100% correct.
Which is a whole other category we probably ought to save for another time.
Yeah.
For someone who is, looking at this at their, range of investments, what's your advice now?
There's other places to invest in. I understand a lot of people have lost money in this market right now, but what you can do is look for alternative investments. And if you're just about to retire in the next 5 years, or you're currently retired, there's other investments that you need to look at that are not as aggressive.
Or if you're a young person, look at it as a buyer's market maybe the next time it goes down.
Yes, with the market's going down, yes. If you're 20, 30s, or 40s, you're not retiring for another 10 years plus, then you can buy stocks and products on sale. But from that original question, you want to basically reduce your risk. You can look at structured notes. Structured notes right now are they issued by banks. 12-month notes are paying between 8 and 9%.
Different times.
Reduce risk.
All right, Ernie Burns.
Yep.
Thanks so much.
All right, now.